It actually, in a strange way, makes me feel better, because being in the tech and telecom bubble was extremely uncomfortable. We knew that valuing companies on the number of eyeballs they might have watching them in 10 years was wrong. And today, and the reason that bubble happened is the internet lit a fire, the genomic revolution, personalized medicine, but the technologies weren't ready, the costs were too high.
Today's video shows how cryptocurrencies, decentralized finance, and AI are changing the financial industry by upsetting old structures and giving regular investors new ways to spend and access to new funds. In an interesting chat with Grant Cardone, Cathie Wood, CEO of ARK Invest, gave more information about how things are changing. She talked about ARK's focus on Bitcoin, DeFi, digital property rights, and artificial intelligence, which aims to give individual investors more power through new technologies. She also talked about Bitcoin's role in the money revolution by creating a rules-based monetary system and how important it is for the system to be decentralized and open. Even though it's hard to make something as reliable as the internet, Wood believes that DeFi will continue to grow. ARK Invest wants to grow in this new industry by focusing on the opportunities Bitcoin and its ability to change the way money works.
It is a net job creator. Now there is
Give me an example. Why would a new technology?
So the internet in the early 90s, we were trying to figure out, okay, what's going to happen here? And we would have never dreamt of Uber and Lyft or Airbnb, but they could not exist without the internet. Right? But we weren't thinking about them. They didn't even come along for 15 or 20 years. So the human ingenuity is amazing.
But what about when they get rid of the Uber driver?
So,
if we ever get autonomous.
And we will.
You're convinced the autonomous is going to happen?
Absolutely convinced.
Because my wife does not trust me driving.
We are going to consider automobiles weapons of mass destruction about 10 or 20 years from now. I can't believe that as a 16-year-old, when I was 16-year-old, my parents let me drive that weapon of mass destruction, right? This is...
You were a bad driver? Or?
So I was a teenager.
Right.
I took risks.
Yeah.
But there are 45,000 people die in the United States because of auto fatalities. 80 to 90% of them are because of human error. And that number in the world is 1.5 million. So, wow. Yes, so this is going to save lives. Innovation solves problems. Innovation solves problems. It actually, in a strange way, makes me feel better, because being in the tech and telecom bubble was extremely uncomfortable. We knew that valuing companies on the number of eyeballs they might have watching them in 10 years was wrong. And today, and the reason that bubble happened is the internet lit a fire, the genomic revolution, personalized medicine, but the technologies weren't ready, the costs were too high. Now the technologies are ready, the costs are too high. What happened back then? Investors just chased the dream, but it ended badly. Now they're running away from the reality, and we think that is going to end badly as well.
So you're talking about what happened with crypto then, recently, that pullback, the NFT. Were you a proponent of the NFT space? And are you now?
Oh, still are. Yes, NFT space, very much so. No, the crypto revolution is
not so talk to me. How many crypto people here? Oh my God, we got some cryptos.
And 3 revolutions in one. We've got the money revolution. That's really Bitcoin and Ether. And that is what Art Laffer, my mentor, said, oh my gosh, this is the rules-based monetary system I've been waiting for since we went off the gold exchange standard in the early 70s. It's a very big idea. Then we've got the financial services revolution. FTX has certainly heard it. But what was FTX? Sam Bankman-Fried did not even like Bitcoin. He didn't like it because it was too decentralized, too transparent, and he couldn't control it. FTX was completely opaque and centralized. It almost proves the point that this movement towards decentralization and transparency is the wave of the future. And we do think DeFi, it is. We're convinced of it. DeFi has had a setback. But this is what always happens early in
the internet busted in 2000. It didn't go away.
And then the third revolution is digital property rights. That, as an economist by training, there is nothing like property rights to raise people and countries out of poverty.
Cathie Wood thinks that Bitcoin is changing the financial world in the same way that the internet did. ARK Invests lets people who aren't qualified investors put as little as $500 into venture capital. The Titan app makes new technologies easier for everyone to use. She also believes that AI would make things more efficient and increase production. Companies that use AI and a lot of private data, like T-Doc, Exact Sciences, and Roku, will do well in this new world. Wood's vision lets people make the future by using disruptive technologies to level the playing field and open up new possibilities. Let's watch the talk again and look at some other clips to find out more from Cathie Wood.
This is digital property rights. And
so are you saying, like, the properties that I buy, I would digitize those and people?
There's going to be the digital and the physical world will be meeting each other. But NFT,
dude, this is amazing. I can't even think with that. How does that happen? Like, how does the digital and the physical world?
Already, if you look at how, maybe not your children, because I know they're homeschooled, so they probably, but if you look at how young people spend their lives, how much of their lives do they spend online?
Yeah.
And their identities are now being formed online. And the authenticity of that identity, the ownership of that identity is becoming critically important to them. So it's a world that you and I are not living in, but it is alive and well, and it is going to burgeon in a way that is going to surprise people who are not paying attention to this. And we feel, and I was listening to some of the commentary here, we feel that everyone needs to be a part of it. And that is why we have broken all the rules, or they're not exactly rules, but the conventions, and we have started our own public-private, dominated by private companies, venture fund that non-accredited investors for $500 can invest in. And we're doing it, talk about the digital world, we're doing it with social distribution through an app called the Titan app. So for $500, individuals who were blocked because they have the right income threshold or asset threshold, they were blocked from these 10Xers, 100Xers. They have been blocked.
You're talking about the big 10 baggers, the big opportunities, the IPOs.
Getting these companies very early on in their lives. And I believe that our research, we're the only company out there doing research exclusively on disruptive innovation, suits us towards this kind of portfolio. So it's the ARK Venture Fund using the Titan app. And I do believe we're going to be democratizing, and that's what I see you doing here. I tell you, even the wealthiest people are having trouble getting into deals because that world of deal making is so small. I mean, we are able to get into deals that foundations and endowments and small institutions are not able to get into because we're doing something different. And the venture world wants to be associated. They've been criticized for not paying attention to non-accredited investors. So they are actually helping us, and we are getting into deals. But to give you a sense of how important I believe this investor base is, if I know our client base in the public world, they are non-accredited for the most part. They're the ETFs,
the base is,
so ARKK, ARKF, these are ARK's ETFs.
These are liquid funds I can get in today, get out tomorrow.
You can get in, out, you can get in, and a minute later get out, right? That's how liquid they are. As I've studied our client base, I have been struck that they know so much more about the technologies we're investing in because they read our research. We give our research away. They're grateful for it. They want opportunities, right? If you ask me who the accredited investors are when it comes to knowledge base, which is how I think this should be measured, it's our client base. It is not the institutions. It is not the high net worth individuals. It is individuals who are excited about how these technologies are going to transform our lives, how they're going to level the playing field and give everyone a shot at an amazing future.
Cathie Wood thinks that Bitcoin is one of the main forces behind the money revolution because it creates a rules-based money system. Since the US left the gold standard in the 1970s, this is important. Animal lover Art Lager told Wood that Bitcoin was the rules-based system he had been looking for since the gold standard. Analysts have different ideas about where Bitcoin's price will go. Some expect a sharp drop to back up their bearish predictions. Matthew Hyland, a crypto expert, thinks that a 12% drop from $672 to $58,000, $800 will prove that things are going badly. This level is important. Anything lower doesn't matter. Hyland refers to changes in the market as noisy times glass nodes. James Check tells long-term buyers to be patient and not make hasty decisions when prices are going down. Check says that using a lot of debt can make things unstable. The total number of Bitcoin futures contracts reached 566,000 on October 15, which was a record high for open interest in the market. This showed that there was a lot of activity in the market and made people more greedy, according to the Crypto Fear and Greed Index, which tracks how people feel about Bitcoin and the crypto market right now. Not all experts think there will be a big drop. Not real name Trader Wolf, on the other hand, thinks the price will fall to between $6,300, $8,000, and $64,500 before it breaks through support. Thanks for watching.